The crypto market just took one of its sharpest drops in months. Over $250 million in long positions liquidated in 60 minutes. Bitcoin broke below $73,000. XRP is sitting at its critical support level right now. And the reason is not the Clarity Act. It is not institutional selling. It is one thing. The Iran situation just escalated again. Today we break down exactly what happened, what it means for the market short term, and why the long-term thesis for XRP is stronger right now than it has ever been, despite what you are seeing on the price chart. This is XRP verified. Let us get into it. Let us start with what actually caused the sell-off, because understanding the trigger is the difference between panic and clarity. US forces carried out a new wave of strikes targeting Iranian military sites and mine-laying vessels in the Strait of Hormuz. Iran's Revolutionary Guard responded by targeting a US military base in Kuwait, calling it direct retaliation. In the space of a few hours, the ceasefire that the market had been pricing in as nearly complete went from 90% done back to an active conflict. That is why you saw over $250 million in liquidations. That is why Bitcoin broke below 73,000. That is why XRP dropped to its 127 support level. This was not a crypto-specific event. This was global risk-off behavior triggered by genuine geopolitical escalation. Now here is the context that separates informed positioning from emotional reaction. Both sides still want a deal. Iran's economy is in freefall. Their inflation is running at 250%. Their oil exports are blockaded. Their ships are sanctioned. Their military infrastructure has absorbed significant damage. They are at the negotiating table not because they want to be, but because they have no viable alternative. The US wants oil prices down before November elections. Both sides have powerful economic incentives to reach an agreement. The current escalation follows a classic brinkmanship pattern. Push to the edge, create maximum pressure, then agree. Every major geopolitical conflict resolution of the past decade has followed this exact sequence. The question is not whether a deal gets done. The question is how many days of market volatility we endure before the ink dries. When that deal is signed, the risk premium that has been suppressing global markets gets removed simultaneously. Oil prices drop, energy costs fall, risk assets recover, and crypto, which has been sitting on a compressed spring waiting for both geopolitical resolution and Clarity Act passage, gets the first of its two major catalysts at once. Now let us talk about XRP's technical situation, because the current price level matters. XRP is sitting at its 127 to 128 support level right now. This is a meaningful floor that is held multiple times throughout this cycle. The Bollinger Bands on the daily chart show we are not yet at oversold territory, which means there is still theoretical room to move lower in the short term if the Iran situation deteriorates further. The next major support below here is in the 120 to 122 range. If that level gets tested, it historically represents a high conviction accumulation zone. The key thing to understand is that XRP has been ranging in this channel since February, 5 months of consolidation. Every time it has broken down from this range, it has recovered, and every time it has broken up, it has been met with selling pressure. That pattern does not break with a random candle. It breaks with a confirmed catalyst. And the catalysts, Clarity Act passage and Iran deal resolution, are both still on the table this summer. President Trump posted on Truth Social again this week specifically about crypto. He called out the anti-crypto forces by name. He described America as the crypto, Bitcoin, and XRP capital of the world. He stated explicitly that other countries are trying diligently to replace the US in that capacity, and that will not be allowed to happen. He called crypto a major industry that must be protected. A sitting US president named XRP directly in a statement about American financial leadership. That is not noise. That is the executive branch publicly aligning itself with the asset at the exact moment the market is panicking about price. The political will is not weakening. The legislative timeline is tight, but the direction has not changed. The Clarity Act is still targeting a summer floor vote. The critical math remains the 60-vote threshold in the Senate. 7 Democrats need to cross the aisle. That fight is real, and it is hard. But here is what the price action is hiding from most investors. Every week that passes without the Clarity Act, The institutional infrastructure for XRP continues to build underneath the surface. Ripple Prime is integrated with EDX markets backed by Citadel, Fidelity, and Schwab. CME just launched 24/7 XRP futures. The XRP ledger is at $4.8 billion in real-world asset tokenization. The DTCC is launching its $114 trillion tokenization engine in July, with Ripple Prime inside the working group. 900 million XRP is approaching locked custody in U.S. spot ETFs. None of these developments reversed because the Clarity Act has not yet passed. They are all live and confirmed right now. The BlackRock Bitcoin ETF saw $527 million in single-day outflows this week, the largest since launch. That is significant. But here's the pattern within the pattern. When institutional money rotates out of Bitcoin ETFs in risk-off environments, it does not disappear. It moves to cash equivalents and then redeploys when clarity returns. And when it redeploys in a post-Clarity Act environment, XRP with confirmed institutional infrastructure, commodity classification, and the deepest real-world asset tokenization growth in the market is positioned to capture a disproportionate share of that returning capital. There is one important development on the XRP ledger itself that is getting overlooked right now. The new AMM Swappable Curves Amendment is working through the approval process. If it passes, it adds concentrated liquidity and stable swap curve types to the XRP ledger's automated market maker, dramatically improving capital efficiency for stablecoin pairs and real-world asset trading on the ledger's built-in decentralized exchange. This is the kind of infrastructure upgrade that does not make headlines during a geopolitical sell-off, but compounds in value as institutional adoption scales. The developers are building during the panic. That is exactly what you want to see. Let me bring all of this together and give you the honest picture. The immediate cause of today's sell-off is the Iran escalation, not XRP fundamentals, not Ripple news, not anything specific to this asset. The geopolitical pattern points toward deal resolution. The economic pressure on Iran is overwhelming, and both sides have November political incentives to close. XRP's technical support at 127 to 128 has held multiple times and remains the key level to watch. The Clarity Act 60 vote math is hard, but the direction has not changed and Trump is publicly supporting it by name. The institutional infrastructure underneath XRP, prime brokerage, ETF inflows, FX coverage, DTCC integration, real-world asset growth, is all continuing to build during this compression phase. And President Trump named XRP directly in an official statement this week as part of America's financial leadership that must be protected. The noise on the price chart is temporary. The structure underneath it is permanent. Stay informed, stay patient, stay positioned. If this video gave you real value today, subscribe to XRP Verified. I cover these developments every single day, so you always know what is happening before the rest of the market figures it out. I will see you in the next one.